So obviously, if you can go down the mortgage route, the more traditional finance, you're going to have an easier time. It's more common, everyone understands it, and also you should be paying the lowest interest rate. So let's talk about normal mortgages for a minute. So the definition of a mortgage is simply using property as security for the performance of an obligation. Usually that's the payment of a debt. So a mortgage isn't necessarily simply buying property. You can utilize a mortgage over an existing property which you have debt free in order to buy more property, or perhaps go on holiday, buy a car, whatever you want. It's simply the fact that it's property that is being used as for security, and the mortgage is simply an encumbrance over that property. So you've got a couple of options when it comes to getting a mortgage, and traditionally you're going to go either to a mortgage broker or you're going to go to the bank directly. Now, each one has its pros and cons. Personally, I always recommend a mortgage broker. A mortgage broker, look, the broker knows all the rules of all the different banks. This is what their job is, right? They understand which banks are going to be aggressive in their lending policies, which ones are pulling back a little bit, and they're also going to be working with you in order to show you up in your best light. The other pros of working with a mortgage broker are that you only have to deal with one person. You don't have to go through all the different credit departments of the bank. You're only dealing with one person that may work with the bank on your behalf. And then they're paid by the bank. A mortgage broker's service is not paid for by you. It's entirely free for you because it's just a way of the banks in order to, one, not have permanent staff, meaning their costs are cut because they only pay a commission once the finance is actually done. And then, of course, they're a professional. You're dealing with a professional within the finance industry. A lot of people in banks aren't actually professionals. They're just someone behind the counter, someone ticking boxes, someone doing a job. Whereas a mortgage broker, they make their bread and butter out of getting finance. They know how it works. They know how to get around some unusual or sticky situations. They know how to turn some of those things into a positive and make you look in your best light. Now, why would you deal directly with the bank? Traditionally, the best reason to deal with the bank is if you've got a long history with them. If you've got a good relationship, if you have a few accounts, maybe a business account, a home mortgage, whatever, then the idea is that the bank is going to look after you better. If you're a long-standing customer, they're probably going to go out of their way. However, customer service has kind of gone down the toilet in recent days. But also, if they're more local, if you're buying a local property and you're dealing with that local bank, then you'll often find that they know more about that property and will utilize their local knowledge in order to get that loan across. Now, as I said, I'm a big advocate for mortgage brokers because they do all the hard yards for you and they tell you which bank is best to go to. The only time I've ever gone direct to the bank was when the mortgage broker couldn't get it across the line, but the local bank could. The reason for this is because a mortgage broker deals with the head office. There's a certain department in the head office that works with all the mortgage brokers. Because the property that we were using as security was in a smaller town, head office didn't like that. But when we went directly to the bank in that small town, obviously they were locals, they knew the property, they knew the area, and they were absolutely fine, and so they were able to tick it off. That is one strategy we have used a little bit, is going direct to the bank in smaller towns, because a lot of banks get paid on how much loan they write. So for example, each branch might have a certain amount they're supposed to write each month, whether it's however many million or tens of millions, depending on the size of the city. So in a smaller town, if you can utilize them and give them the business, meaning they're writing more loans, even if you're investing somewhere else, it can be good for both of you, and they can really push to get the loan across.